as deductibles on insurance policies have become larger and larger, now we're seeing $20,000, $25,000 deductibles a lot more frequently. You have to have a clear policy in place so that when there is a loss, how are you going to handle that deductible? And the statute, if they're subject to the Minnesota Common Interest Ownership Act, will generally allow the association to choose one of three options. And what we want to have the board do is adopt a policy in advance that says, when there is a claim, this is exactly how we're going to handle it. And the way we typically write that insurance deductible policy is that the deductible is going to be assessed to the unit that was damaged, or units in the case multiple units are damaged. If it was something that the association was responsible for maintaining, or it was an act of God, so windstorm comes through and there's a roof leak, the association will contribute towards that homeowner's deductible up to $500 or $1,000 depending on the board's policy. And then that way the homeowner has no out-of-pocket expense. If there's a $25,000 loss with that deductible on it, with a $1,000 homeowner HO6 deductible, the association pays that, HO6 insurance pays that difference, and the homeowner, it didn't cost them anything to get the work done. Then it avoids having an argument of, well, you're responsible for maintaining that, and now I'm out, and you should owe me, pay me for this. But if it's something that originates inside the unit, so somebody leaves a pan on the stove and catches on fire, in there, the entire deductible would be assessed to the homeowner. Association really shouldn't be using association funds for that. That homeowner could have prevented that loss by not being careless. We also will assess the deductible in proportion to the share of the loss of each unit. So if there are multiple units damaged, or even the common elements as well were damaged, each party is going to pay their share of the deductible in proportion to their share of the loss. So if the loss was $100,000 and $20,000 of it was in this one unit, that unit is going to pay 20% of the deductible. It's a fair way, and insurance HO6 companies like it because we're not now getting into liability and we're assessing, some additional insurance to them or deductible to them because they had a greater liability. Insurance companies don't like that because you have to prove the liability in some instances, and that can be very challenging. And so we just leave it at that whoever incurred the loss, they share their fair share of it, and then it's up to the HO6 insurance companies to decide what they want to do about it, collect or subrogate from other companies.